NIO, the turning point in premium EV. NIO's first ever quarterly profit marks a structural inflection, record delivery growth, disciplined cost cuts, and a BaaS infrastructure moat reignite the long dormant bull thesis as the community draws comparisons to early Tesla and watches $5.50 with fierce anticipation. Bull case. First profit, early Tesla parallels, and the road to $12. After years of burning cash at scale, NIO has delivered the earnings report that bulls have been waiting for, the company's first ever quarterly profit, accompanied by record deliveries of 326,028 vehicles for full year 2025, a 46.9% year-on-year surge. For the community, this is not merely a data point, it is the moment a narrative changes. The Tesla comparison has gained traction in earnest. Early Tesla, too, was written off as a loss-making vanity project until a profitability inflection triggered a fundamental re-rating that left short sellers in ruins. Bulls argue NIO now stands at a structurally analogous juncture. The path to genuine scale has been demonstrated, the cost structure is bending in the right direction, and the product portfolio, spanning the premium all-new ES8, mass market ONVO L90, and the compact FIREFLY, addresses multiple addressable segments simultaneously. This is the quarter that changes the conversation. NIO is no longer a story about survival. It is a story about what premium Chinese EV leadership looks like at scale. Management's target of non-GAAP operating break-even for full year 2026 adds credibility to the trajectory. Q1 2026 delivery guidance of 80,000 to 83,000 vehicles represents a staggering 90 to 97% year-on-year increase, numbers that, if achieved, will make it difficult for the market to maintain its current skeptical discount. Market dynamics. $5.50 resistance, max pain, and the short squeeze setup. No price level in NIO's current trading environment carries more psychological and technical weight than $5.50. Traders have closely monitored the stock's repeated approaches to and failures at this threshold, reading in those failed breakouts the fingerprints of coordinated resistance. Whether the mechanism is options market max pain convergence, aggressive short side defense, or simple technical supply from prior buyers seeking exit, the practical effect has been the same, a ceiling that has frustrated long holders at precisely the moments when fundamental news appeared most compelling. The post-earnings trading session has sharpened the community's focus on what lies beyond that level. The prevailing thesis among bullish retail traders is that a decisive, sustained close above $5.50 would trigger a cascade of forced short covering, a short squeeze dynamic amplified by the stock's significant short interest and the newfound legitimacy conferred by genuine profitability. Asian market volume, particularly from Hong Kong, where NIO is also listed, is increasingly cited as a potential force multiplier. Historically, strong domestic Chinese investor sentiment following a landmark earnings report has preceded sharp gap-up moves in the US-listed ADR, with overnight Hong Kong price action setting the tone for Western session opens. Infrastructure and technology, BaaS, battery swaps, and the Shenji autonomous driving and AI chip program. NIO's competitive differentiation extends well beyond the vehicles themselves. The company's battery as a service BaaS network, now spanning 3,815 swap stations globally, represents a form of infrastructure lock-in that has no direct parallel among Western EV peers. For existing NIO owners, the swap ecosystem creates a structural reason to remain within the brand. For prospective buyers, it eliminates range anxiety in a way that charging infrastructure alone cannot yet replicate. The long term monetization thesis around BaaS has captured the imagination of analysts who see recurring subscription revenue as a path to stable, high margin cash flows that could command a premium multiple independent of vehicle margin trajectories. Equally significant is the emergence of the Shenji Autonomous Driving and AI Chip Program. Having raised RMB 2.257 billion yen in external funding for the initiative, NIO is developing 5 nanometer chips targeting not only its own vehicle fleet, but also potential external OEM customers, a business model pivot that could transform NIO's chip unit from a cost center into a revenue generating technology licensor, adding an entirely new valuation layer to the equity story. Risk factors: input cost inflation and the margin preservation challenge. The primary threat to NIO's freshly minted profitability narrative is not competitive pressure or demand, it is input cost inflation. Rising prices for battery raw materials, memory components, and structural metals represent a margin headwind that management has acknowledged and that analysts are closely monitoring. Vehicle margin for Q1 2026 is guided as broadly similar to Q4 levels, which provides near term visibility but does not eliminate the risk that raw material cost escalation compresses the improvements achieved by volume growth and product mix optimization. The tension is structural. NIO's premium positioning provides pricing power that mass market Chinese EV peers lack, but it does not render the company immune to commodity cycles. A sustained period of elevated input costs, particularly in lithium, cobalt, and semiconductor substrates, could materially delay the timeline to non GAAP operating break even that underpins the most optimistic valuation frameworks.
Okay, so the stock has surpassed 5.50 now. It's now 5.53. Volume is 102 million shares. It has to be one of the most active. It's also optionable. It surely is the reason why it's okay. It has this 50-day average of 46 million shares, partly due to what market makers and option traders are doing. Just the activity, adds to those figures, and then surely today as well, what they're doing must have added to this volume we are looking at right now. Okay, so the stock is expected to maintain the strength up till let's see what we have, up till Tuesday the 17th. After that, it might contract and may pick up support from its 40-day moving average and maybe resume the uptrend. As things stand right now, projections are saying 5.32, 5.68, 5.90. The pivotal projection is 5.9. If it closes above that, then we're looking at the prospects of testing 5.99. Yeah, it's heavily traded in both its derivatives, options, and all that. So it doesn't. The algos understand that. The algos get these projections partly from what the option order books are, the data from the order books. So it's aware of all of that. That's why it's not projecting really ambitious projections. The 10-day moving average is saying that yes, validating what we have here, that strength might remain in place up till yeah, let's see what we have up till the 17th of March. Okay, let's see that moving average is gaining 46 cents, roughly 47 cents every day. Okay, we can also have a look at the moving averages, the other moving averages, the 21-day moving average, to see how it is aligning, whether it's diverging from whether it's diverging or aligning with the 10-day moving average. Okay, it's pretty much flattish, whereas the 10-day moving average is expressing a lot of volatility, at least between now and the 7th of April. Okay, yes. I can also say that to some extent, the 21-day moving average is also doing so as well. Okay, but modestly at that. So we could just say that they are aligning, but the 21-day moving average is aligning with more caution. Yeah, Let's see what we have for the 40 and the 200-day moving averages. Well, the two of them are aligning. In the short term, they are projecting that this momentum might remain in place at least up till the 18th of March. Is that what we have for the other moving averages? Then after that, the 200-day moving average is expected to remain intact. So this uptrend is expected to remain intact at least up till the 22nd of April. Yeah, pretty much. Also, that is the case with its 40-day moving average. But for the 200-day moving average, nothing. There's nothing to the extrapolation saying that there is nothing to worry about. The structure will remain in place. This strong trend, this bullish trend, might is likely to remain in place. Yeah. Let's see. The momentum is expected to remain strong for up to the 18th of March based on these two moving averages. Let's see whether those other ones are doing the same as well. I've totally forgotten what I just saw now. Yes, yes, yes. Up till the 18th. Is that what we have? Yes, yeah. Okay. We have an alignment at least between now and the 18th of March. We have these two moving averages. All the moving averages are in sync. All of them are in sync. But anything from there on, not the same. And if from anything from the 8th, from the 19th, is just not totally different. Yeah, yeah. They in the very short term they are all aligning, but outside that they're all the shorter ones are aligning, and they're all divergent from the medium and the longer one. So there's a chance that between now and the 17th we might see higher prices. It may maintain the strength it has. Yeah, let's see. Fingers crossed. Fingers crossed. Let's see. It may do so. Yeah, let's have a look again at what that extrapolation is saying between now and the 17th to 18th. Yes, yeah, they're saying that the strength might remain in place up till then. Yeah, okay, yeah. So have a look and see what you make of NIO stock. But you need to be very much aware that it has been printing high prices since it has been in an uptrend since the 4th of March. Expect a pullback to happen, even though we have this extrapolation saying that strength may remain in place up till the 18th, if not even 19th. We have a cluster of validations saying that yes, that's what may happen. But I would say expect a pullback to happen as well. Okay, anytime soon, even by tomorrow as well. Okay, so thank you very much for watching this video.